Hello everyone, I am Murali Manohar from Tally Solutions. Today I am going to take you through the inward supply transactions, advance payment under reverse charge and few adjustment entries which will be part of Form GSTR 2. To start with, let us create a new company called National Traders based in Karnataka and accept the company creation. Now let us enable GST from F11 features, statutory and taxation. Enable goods and services tax, yes. Set or alter goods and services tax details, yes. The state Karnataka is inferred from the company profile screen which we entered during the company creation, and the registration type will be by default regular. The GSTR number, let us enter the GSTR number starting with state code followed by PAN number, entity code, set and checksum digits. The applicable from will be 1st July 2017. Now let us enable this set or alter GST rate details, assuming that I am dealing in single tax rate goods or the goods for which the tax is same most of the cases. So I'll set the taxability as taxable, and since most of the time I'll be dealing in 18% tax rate goods, I'll give 18% against integrated tax. This will be equally distributed among central tax and state tax. Central tax 9% and state tax 9%. Let us accept this tax rate details by pressing Ctrl A, GST details by pressing Ctrl A, and statutory and taxation features by pressing Ctrl A again. We have created a new company and we have set the tax rate details at company level. Now let us first go to the GSTR 2 form and understand the transactions which will be part of GSTR 2. So in GSTR 2, all the inward supplies will be part of GSTR 2. We have B2B invoices. All taxable inward supplies will be part of this table. Import of goods. The import of goods from foreign supplier will be part of this import of goods invoices. The import of services from foreign service provider will be part of this import of services invoices. Debit note. The purchase returns will be part of this debit or credit notes table. Nil rated invoices. All inward supplies on which tax is not applicable, that is exempted, nil rated and non-GST goods. And again we have purchases from composition dealers on which tax will not be applicable, and we have purchases from unregistered dealers. The purchases from unregistered dealers, if it is taxable, it will be part of my B2B invoices, and if it is exempted or nil rated, it will be part of my nil rated invoices. And we have ISD credit. If we receive input tax credit from my input service distributor, that is, if my head office is an input service distributor and transferring its input tax credit to my branch, that is to my unit, then I'll be receiving input tax credit from the input service distributor. For that, the input tax credit value will get captured here under ISD credit. And we have TDS credit. While receiving payments from customers, if the TDS is deducted out of that payment, the TDS deducted amount can be claimed as TDS credit. This will be auto-populated when TDS deductor files Form GSTR 7. And we have TCS credit. All e-commerce operators are required to collect TCS and file Form GSTR 8 for the TCS collected. This will be auto-populated when the TCS collector files the Form GSTR 8. we have ITC received. If we have not received input tax credit in the previous return period due to non-filing of returns by the supplier, and if the supplier files the returns during the current month, the same can be availed as input tax credit, and in GSTN portal it will get auto-populated based on the returns uploaded by the supplier. Tax liability under reverse charge on advance. If we are paying advance payment to our supplier under reverse charge mechanism, the tax liability will arise at the time of payment, and the tax on advance payment will be part of this table called tax liability under reverse charge on advance. Tax paid under reverse charge on advance. If we have paid the advance payment to our supplier and receiving the goods in the next month, then in the next month the tax paid on advances in the previous month will reflect as tax paid under reverse charge on advances in the current month, and this will be net off against the tax liability. And we have ITC reversal. All input tax reversal will be part of this table. This will include ITC reversal on account of exempted supplies and the ITC reversal on account of non-business supplies. So these are all the transactions that are going to be part of my GSTR 2. So now let us record the transaction and experience the appearance of those transactions in this report under respective table. Let me go to Gateway of Tally, Accounting Vouchers, and record a purchase voucher. Since the GST is applicable from 1st July, let me change the date to 1st July, 1/7/2017. Since it is a new company, I have to create my party ledger. So I'll press Alt 3. I'll create a party ledger by name VR Trader under Sundry Creditor, and he will be a local dealer from Karnataka and a regular dealer. So regular dealer will have GS PIN number. So I'll be entering the PIN number, followed starting with state code, followed by PAN number, entity code Z, and the checksum digit, and I will accept the ledger creation. So now we are not going to configure I don't have purchase ledger. I'll create a purchase ledger here and a purchase account. Since we have configured the tax rate details at company level, I'm not going to I'm not going to configure the tax rate details in my purchases ledger. I'll accept the ledger. So if we see the type of supply, when we create a ledger, by default the type of supply will be services, and we have a flexibility to configure the type of supply as goods as well. So let it be services, default one. If we see the tax classification, by default it is picking purchase taxable. Since we are purchasing the goods from a regular dealer and he is from the local state Karnataka, it is picking as purchase taxable. If he is the regular dealer from other states like Tamil Nadu, so by default it will pick the classification as interstate purchase taxable. So it will check for the address in the party ledger and pick the appropriate classification. Let us proceed with the transaction. I'll create a stock item, mobile phone. So again, in the stock item creation, I will not configure the tax rate details since the tax rate details are configured at company level. If we see the type of supply in the stock item, it is by default goods. Again, we have the flexibility to select as services. Let it be goods and accept the stock item creation. I'll record the purchases inward supplies of 100 quantity at 10,000 rupees, assuming that my mobile phone is at 10,000. So, since it is a local inward supply, I have to calculate central tax and state tax. So let me create central tax ledger, Alt C for creation, central tax. Under duties and taxes, the type of duty will be GST and tax type will be central tax. Since I'll be using this duty ledger commonly for all my different tax rate goods, I'll not specify the percentage. So the percentage will be fixed based on the tax rate which I have set up in the company level. Let me accept this ledger creation, and the tax rate is calculated at 9% on this 10 lakhs. Again, I have to calculate state tax. Under duties and taxes, the type of duty will be GST again, and the tax type will be state tax. Let me accept this ledger creation. See, the tax applicable on mobile phone is 18%, and it is equally divided into central and state tax. Central tax 9%, state tax 9%. So 9% and 9% on 10 lakh is 90,000 central tax and 90,000 state tax. Let me accept this purchase. So before accepting this purchase voucher, if you want to know the details of the tax percentage and the assessable value or taxable value, we can go to this tax analysis. We can use a shortcut key Alt A, or we can directly click on this tax analysis to get the detail of this tax calculation. So if we want to view in detail mode, we can press Alt F1 or click on this detailed. So it will give us the detailed tax analysis. So it is, the taxable value is 10 lakhs and the tax is 18%, where central tax is 9% and state tax is 9%. So this is the tax analysis. So let me escape this tax analysis to complete the voucher. So it will be a new reference in my bill details, and I'll accept this voucher. So since it is a taxable supply, this supply will be part of my GSTR 2, and the value will get captured under B2B invoices. Let me now record a purchase from a regular dealer who is from other state. So it will be an interstate purchases, interstate taxable purchase. Let me record a transaction. Accounting voucher, purchases, I'll change the date. Let me create a party ledger. We are traders from Tamil Nadu under sundry creditors. I'll change the state as Tamil Nadu, and the GST details of party. He is a regular dealer from Tamil Nadu, so the state code will be 33, followed by PAN number, entity code, set by default, and the checksum digit. Let me accept this ledger creation. So since he is a party outside state, when I select the purchase ledger, the tax classification will by default pick as interstate purchases taxable. Based on the party's address, it is picking the classification. So let me accept this and select the stock item. So I am purchasing 10 quantity, 12,000. So on my interstate purchases, it will not be a central tax and state tax. It will be an integrated tax. So let me create a integrated. Under duties and taxes, the type of duty will be GST, and the tax type will be integrated tax. Again, here I am not specifying the percentage since I am going to use it commonly for all my tax rate goods. So it is calculating at 18% on 1,20,000. If you want to see the details, you can use tax analysis, detailed mode. So it is 18% on 1,20,000. So the tax value will be 21,600. Let me escape the screen and accept the voucher. Again, this is the taxable supply, taxable inward supply, and will be part of statutory reports GSTR 2 under B2B invoices. Now again, let me record a taxable inward supply from an unregistered dealer. I'll go to accounting voucher, change the date, create a new party, unregistered dealer, sundry creditor, under sundry creditor, and the party is local from Karnataka. The registration type will be unregistered. So since it is an unregistered dealer, it will not ask for the GSTR number. Let me accept this party creation. Now, I'll select the same purchase ledger, but based on the party's registration type, it will select the classification as purchase from unregistered dealer taxable. Let me accept it. So even though he is a local dealer and I am purchasing from a local dealer, since he is not authorized to collect tax, the tax will not get calculated in my purchase voucher. Right? So I should not select any tax ledger and I should accept the voucher. But even though I am not selecting the tax ledger, the tax will get calculated since it is a taxable supply. So we are not showing the tax ledgers or tax values in the face of the voucher, and the tax will get calculated at the back end. And for this transaction, even though the supplier is not collecting the tax, we as a registered dealer, we have to raise the liability, make the payment, make the tax payment to the department, and claim the tax paid amount as input tax credit. So let me record the import of goods transaction and import of service transaction, and later take you through the adjustment entries for raising the input tax credit, for raising the tax liability, making the tax payment to the department, and availing the input tax credit. Let me record import purchase accounting vouchers. I'll create a new party. We are traders from Singapore. Under sundry creditors, the country will be Singapore. So when we select country other than India, the cursor will not move to set or alter GST details. Let me accept the screen. So based on the party's address, when I select the purchase ledger, the classification will be import taxable. So since my foreign supplier will not collect tax from me, I will not select tax ledger in my purchase voucher. Accept the screen. So I have recorded the import of goods invoice in the purchase invoice as a invoice mode. So this will be part of my GSTR 2 under import of goods invoices. Now let me record the purchase transaction from the same party, We Are Traders Singapore, But now, since it is a services transaction, I will be recording it as a voucher. Since it is a services transaction, I will be recording it as a voucher. $50,000, and I will debit my purchases ledger. This will be part of my GSTR 2 under import of services invoice. The import of goods which we recorded in the invoice mode, and by selecting the stock items, that is getting captured as import of goods invoices, and the import of services which we recorded as a voucher without selecting any stock items, that is getting captured as import of services. Now we have recorded purchases from unregistered dealers, import of goods, and import of services. In all these three cases, the supplier is not collecting tax from me. Even though the supplier is not collecting a tax from me, as a registered dealer, I have to generate the tax liability from my end, make the tax payment to the department, later avail the same as input tax credit. Now let us record these adjustment entries. So to start with, I have purchased goods from unregistered dealers, 10 quantities at the rate of 15,000. So the total value has become 1,50,000. On 1,50,000, the tax is 18%. So central tax will be 9%, state tax will be 9%. Central tax 13,500, state tax 13,500. So let me record the tax liability on such purchases from unregistered dealers. I'll go to accounting vouchers, journal, S7 journal, use the stat adjustment, GST, increase of tax liability, purchase under reverse charge. Now, since I am increasing the tax liability, I should debit any of my current assets ledger or expenses ledger and credit my duty ledger. Let me create a current asset ledger, tax on reverse charge. Under current assets, so the tax liability amount will be 27,000, central tax 13,500, state tax 13,500. So this will be under reverse charge mechanism. So the reverse charge mechanism will be, the tax liability will be on the recipient. I am a recipient of goods. My supplier will not collect tax from me. I have to raise the liability, pay the tax to the department, and claim the tax paid amount as input tax credit. Now we are raising the tax liability by debiting my current asset ledger and crediting the duty ledgers. Let us accept this voucher. So the tax liability has to be remitted to the department. I will be recording a payment voucher for that using the stat payment option. I will select tax type as GST, the tax period as July. Since I am a purchaser of goods and I am raising the liability from my end and paying the tax to the department, it will be a recipient liability. So I'll select the payment type as recipient liability. I'll create and I'll debit my central tax 13,500, state tax 13,500. Now, whatever liability we raised, that liability is getting set off in this payment voucher. Here we have provide GST details in the payment voucher. This will ask for the bank details like payment mode. It can be over the counter, cash, check or DD, or e-payments, credit card, debit card, NEFT or RTGS, or net banking as a e-payment. And it will ask the name of the bank, common portal identification number, challan identification number, bank reference number or the unique transaction reference, and the payment date. So let me accept this payment voucher. So in this payment voucher, I am remitting the tax to the department. Now, since I have remitted the tax to the department, I have to avail the input tax credit, right? So I will record a journal voucher with the stat adjustment, GST, increase of input tax credit, purchase under reverse charge. So I'll debit my central tax since I am increasing my input tax credit. I'll debit my duty ledgers, central tax for 13,500, state tax for 13,500. And I'll credit my tax on reverse charge ledger. So now I have raised the input tax credit on my tax paid amount. So these three adjustment entries, the adjustment entry for increasing the tax liability and later making the payment to the tax department, and adjustment entries for increasing the input tax credit. These three will be common for the purchase from unregistered dealers, import of goods and import of services. All these three transactions, purchase from unregistered dealers, import of goods and import of services, will be part of reverse charge transactions. The supplier will not collect tax. As a registered dealer, we have to raise the liability, make the payment to the department and take the credit of tax paid amount. Now, let me record purchase return to capture the value against this debit note. Let me record a purchase return. I'll record a purchase return against this transaction from VR Traders on 1st July. The voucher number is 1. I'll record a debit note. I'll go to accounting vouchers. Here the credit or debit note is not highlighted. We need to enable debit and credit notes from S7 features. I'll accept this F11 accounting feature. So now, as we're getting debit note, I can press Ctrl F9 for debit note or click on this debit note. I have to mention my original invoice number, it is 1, and original invoice date, it is 1st July 2017. I'll select my supplier, VR trader, purchase ledger, and the stock item which I purchased. So I will return 10 quantities out of 100. The rate will be 10,000 because this is the rate at which I purchased the goods. And I'll select the tax ledger. Now here I have to set off this debit note against my purchases. So I will select against reference. So if we are not getting this bill-wise detail screen here, we have to go to this F12 configuration, and we have an option called use defaults for bill allocation. This option has to be set to no. When it is set to no, only then we'll be getting this option. So here we have to set off this debit note against my purchases. I'll select against reference and select the purchase bill and accept the debit note. So this will be captured in my GSTR 2 against debit note. Now we have nil rated invoices, in which my exempted purchases, nil rated purchases and non-GST goods purchases will be part of this nil rated invoices, and along with these invoices my purchases from composition dealers and purchases from unregistered dealers if the goods are exempted or nil rated. This transaction will also be part of my nil rated invoices. Let me record the transactions for this. I will record one transaction in which I will be selecting all my invoice exempted goods, nil rated goods and non-GST goods. F9 purchases, to change the date, I will select VR traders, he is a regular trader and a local trader. I'll select the purchase ledger. Now I'll stock items, one for exempted, and in all the stock items I'll set or alter this GST details and select the respective taxability. Since this stock item is exempted by nature, I'll select exempt as a taxability and accept the stock item creation. And now I'll create goods. Again here I'll set or alter GST details and select the respective taxability as nil rated. I'll accept. Now, non-GST product, we have non-GST products like petroleum products, alcohol for human consumption, and we have power sector. Now I'll create a non-GST product, petrol. And again, here I'll set or alter GST details for this petroleum product. And we have is non-GST goods. This option will be getting when the option in F12 configuration is set to yes. Set type of goods is set to yes in the F12 configuration. So we'll get this is non-GST goods. We have to enable if the goods is not covered under GST. I'll accept the stock item creation. Now, since all these goods are nil rated, in the sense exempted goods, we won't be calculating any tax. Nil rated goods, again there is no tax. Non-GST goods, again there is no tax on this goods. So I will select end of list here, and it will be part of my nil rated invoices. So again, under nil rated invoices, I have exempted nil rated and non-GST. So the respective value is getting captured against each table. Again, we have URD purchases. If I am purchasing goods from unregistered dealer and if the goods is exempted or nil rated, that value will get captured under this nil rated invoices against URD purchases, and the purchases from composition dealer will get captured here. So let me record these two transactions. From unregistered dealer, I am purchasing an exempted goods, and again nil rated goods. This will get captured in my nil rated invoices against URD purchases. Right. Now let me record a purchase from composition dealers. Accounting vouchers. I'll change the date and I'll create a new party. Under summary creditor, and he is a local dealer. The registration type will be composition. Even though he is a composition dealer, he will be a registered dealer and having GSTR number. So the GSTR number starting from state code, followed by PAN number, entity code, Z, and the checksum digit. Purchase from composition dealer is the classification. So let me proceed with the transaction. So even if I am purchasing a taxable goods from this composition dealer, it will be part of my nil rated invoices, since the composition dealer will not collect any tax from me. So the tax will not get calculated here. So no need to select the tax ledgers. This will be part of my GSTR 2. Under nil rated invoices and against composition dealer purchases. Now let me record a transaction adjustment entry to capture the value against ISD credit, TDS credit, stat adjustment. So it will take me to the journal voucher. Type of duty will be GST, increase of input tax credit, ISD transfer. Assume that I am getting a input tax credit against this integrated tax 2000 from my head office. I'll create my head office. It can be under branch or division, or it can be under indirect income sale. So let me accept this. This will be part of my ISD credit. Now let me again record a transaction for TDS credit, stat adjustment. It will take me through the journal voucher again, GST, increase of input tax credit, and TDS adjustment. I'll select any of the tax ledgers. I'll select integrated tax, and I'll credit my TDS So in the same way, we can record transactions for teachers credit also, and ITC received or ITC reversal also. So now let me proceed with tax liability under reverse charge on advance. See, in this case, if we are making any advance payment to my unregistered dealer, if I am making any advance payment to my unregistered dealer, this will be part of my reverse charge transaction, and on such advance payment to unregistered dealer, my tax liability will arise. And after making the advance payment to the unregistered dealer, we need to raise the liability on such payment, make the tax payment to the department. So after making the tax payment to the department, once we receive the goods, after receipt of goods, we have to avail the input tax credit. So let us record these transactions now. I'll record an advance payment to my supplier who is an unregistered dealer. I'll go to F5, payment voucher, and since I'm making an advance payment under reverse charge, and the payment which I'm making is for unregistered dealer, I'll select reverse charge advance. So it will be advance payment under reverse charge. I'll select unregistered dealer. It is not necessary to select the stock item during the advance payment. So I'll select not applicable, and I'll select my purchase ledger. So based on the tax rate configured at company level, it is taking central tax as 9% and state tax is 9%. Since the dealer is a local dealer from Karnataka. So I'll mention the advance payment amount as 1 lakh. The tax is central tax 9,000, state tax 9,000, that's 9%. Let me accept this screen. So the method of adjustment will be advance in my bill by details, and I will not select the tax ledgers in the face of the voucher. Even though I am not selecting the tax ledgers in the face of the voucher, based on this tax payment advance payment details, based on this advance payment details, the tax amount will get captured in my GSTR 2 form. Now when I navigate to GSTR 2, the advance payment made to the unregistered dealer under reverse charge will get captured against tax liability under reverse charge on advance. The values are inferred from the advance payment details screen. So this value will not be part of my books of accounts until I record the adjustment entries. So for this, I have to raise the tax liability, make the payment to the department, and later, after receiving the goods, I have to avail the input tax credit. Now, if I have made the advance payment in the month of July, and if I am receiving the goods in the same month, that is July, I am not supposed to raise the liability or make the payment. I can directly purchase the goods, and later, after purchasing the goods, I will be raising the liability and making the payment. It is not after the payment. If it is in the same month, it is not after the payment. It is after the purchase, I will be raising the liability and making the payment to the department. After making the payment to the department, I will avail the input tax credit. If I have made the advance payment in the month of July and receiving the goods in the month of August, I have to raise the liability in the month of July and make the tax payment in the month of July. And later, after receiving the goods in the month of August, I have to avail the input tax credit. Now, we will take the second scenario where we have made the payment in the month of July and we are receiving the goods in the month of August. Now, for this, I have to raise the tax liability. So I'll go to General Voucher Tax Adjustment, increase of tax liability, advance paid under reverse charge. I'll select the nature of adjustment as advance paid under reverse charge. Debit my tax on reverse charge ledger, which is the current asset ledger, for 18,000, and credit central tax 9,000, state tax 9,000. So in this voucher I have raised the liability. Now I have to make the payment to the department. Once I have raised the liability, those values will be part of my books of accounts. So until I raise the liability, it will be part of only my GSTR 2 reports and it will not be part of my books of accounts. So once I raise the liability using this tax adjustment journal voucher, it will be part of my books of accounts. Now, the tax liability has to be remitted to the department. So I will record a payment voucher using this tax payment GST for the period July, and it will be a recipient liability. Since I am raising the liability from my end and making the tax payment as a receiver, it will be a recipient liability. I will credit my bank account and debit the tax ledgers, central tax 9,000, state tax 9,000. And again, provide GST details. It will ask for the bank details, payment mode, name of the bank, CPIN, that is Common Portal Identification Number, Challan Identification Number, bank reference number or unique transaction reference, and the payment date. So once after entering all these details, we can accept the payment voucher. So now we have made the advance payment to the party in the month of July, and we have raised the liability and also we have made the payment in the same month. If we receive the goods in the next month, August, so let us record the purchase transaction in the month of August. I'll record the purchase transaction from the unregistered dealer to whom I have paid the advance payment. And here in the view-wise details, I will select against reference and set off the advance payment. Now, when I navigate to GSTR 2, the tax paid in the previous month, that will appear under tax paid under reverse charge on advances, and this will get net off against the current month purchases, against the advance payment. So we have made these purchases against the advance payment. So this amount will get net off against this tax paid during the last month. Now, after making this inward supply in the current month, we have to raise the input tax credit for the tax paid amount. So I will record accounting voucher journal with tax adjustment, increase of input tax credit, and I will select tax paid on advance under reverse charge. I will debit central tax for 9,000, state tax for 9,000, and I'll credit tax under reverse charge for 18,000, which I had debited during my increase of liability. So now, during my increase of input tax credit, the value under tax on reverse charge is getting nullified and it is getting transferred to my central tax and state tax. So my input tax credit is increased here. So this is with regard to the transactions for accounting advance payment to supplier under reverse charge. So now let me record a transaction for ITC reversal, assuming that I have claimed the ITC. Later I have made a supply which is an exempted supply. Now that ITC has to be reversed. So for that, the adjustment entry will be a journal voucher with stat adjustment, reversal of input tax credit. So since it is a reversal, I will select any of my debit any of my expense ledger. I will debit it for from 9,000 and credit my central tax for 4,500, state tax for 4,500. First entry will be part of my ITC reversal. So these are all the transactions which will be part of my GSTR 2. So now we have done with the transactions part. Now let me take you through the status reconciliation in GSTR 1 and the e-return of GSTR 1 form. Display statutory report GST GSTR 1. So this is the status reconciliation report. So all the approval, rejection, modification and confirmation will be done on the GSTN portal. In Tally, the GSTR 1 report has the status reconciliation feature that enable you to mark status of each transaction based on the online status. This will allow you to keep a track of the status of vouchers without having to log into the portal again and again. Now let us proceed with this status reconciliation. In count, we will be getting the total vouchers for the reporting period, total vouchers against each table. And we have activity status. Under activity status, we have different columns for to be uploaded, rejected by GST, accepted and rejected. So this to be uploaded will have all the vouchers that are yet to be exported. It will capture all the vouchers which are yet to be exported. Once the vouchers are exported, it will be part of my uploaded column automatically. It will capture under my uploaded column automatically. And we have rejected by GST. Vouchers marked as rejected by GST in the portal. This will be marked when the GST rejects the vouchers for duplicate invoices, reference of original transaction is not found in case of debit or credit notes, or if the GST of any user is being suspended. So this information will get captured against rejected by GST, and the same can be the same status can be set in Tally also. And we have accepted. So the status can be marked as accepted when input tax credit claimed by the buyer in GSTR 1A is accepted by us. As a supplier, if we are accepting the input tax credit claimed by the buyer, we can mark it as accepted here. Or if the input tax credit claimed by the buyer is rejected, we can mark it as rejected. We have the reconciliation status, where we have not reconciled and reconciled. The not reconciled can be marked when details in the online portal doesn't match with our books. If it is matching with our books, it can be marked as reconciled. So now, to change the status of the vouchers, we can drill down into this voucher and set the status. The status can be set as accepted, rejected, or uploaded, to be uploaded. Any status can be set and can be marked as not reconciled or reconciled. Right? So we can set the status for individual transaction, or we can press Control space bar to select all the transactions and mark the status for all the transactions at one shot. So this is with regard to the status reconciliation report available in Tally. So once all this is done, we can generate the e-return. So when we generate the e-return, it will say some of the selected transactions have been exported already. If it is exported, we can just directly click yes to include them or no to exclude them from the export. So even if we click include, if the transaction, exported transaction doesn't have any modification, that will not get overwritten. If it is having any modification, the modified information will get overwritten. So when we are exporting GSTR1, the output file name will be GSTR1 followed by GSTIN number and the return period. So the form is getting exported. So here we have supported the offline capability of filing the returns. The form will get exported in Excel. The exported form will look like this, and it will contain the sheets based on the tables. So to file the returns, the GSTN portal will accept the return in format JSON, .json format. The GSTN portal will accept the returns in .json format. So the return file exported from Tally will be an Excel file. So this has to be converted using the offline utility tool. The offline utility tool downloaded from GSTN portal. The offline utility tool will look like this, and the user has to click on New, create new offline file. By default, it will select GSTR1. Since the offline utility will support GSTR1 filing, it will be GSTR1. The user has to key in the GSTIN number of supplier, the financial year, tax period, and the gross turnover, and click on Proceed. And to import all the sections of the exported Excel file, you can click on Import Excel, or to import particular section from the Excel file, you can select the particular section and click on this Import Excel. So it will ask for the Excel file. So we have to browse the Excel file, the exported Excel file, and When we import the Excel file, it will show us the success message. If we don't have any conflict, it will show the success message. We can click on enter. So it will give us the summary of uploaded transactions, and we can click on generate file for generating this .json file. So this .json file can be uploaded on GSTN portal for filing the returns. So all the transactions and the status reconciliation and exporting of e-return capabilities demonstrated in this session will be useful, highly useful to you and highly beneficial during your bookkeeping. Thanks for watching this video. Thank you.